Greetings fellow traders, Sive Morten is here with the ForexPeaceArmy.com and our daily update on the gold market. So today we're speaking about the technical picture, considering some levels where potentially we could get another position if you have missed previous entries that we have discussed. The thing is obvious, so our trading plan is working, gold market is speeding up with the performance, and now we're watching for taking out of the top. It's obviously that gold is aiming on the breaking of the 35 area. So the pennant that we see on a weekly chart and that we're started discussing as far as 2 weeks ago now is becoming evident, and you could see, for example, in the Twitter, it's just full of these pictures with the same pennant. So it's now becoming evident for everybody. So overall performance looks really nice. Gold market is bullish here. It's not at overbought, so overbought level stands around 30, even above the top, so around 35 area. So here's where we don't have any problems with the further upward continuation. Market has no big resistance levels, feeble resistance levels just above it. Very easy way to go. So on the 4-time frame chart, here's some kind of the maybe channel is forming or something like this. The OP target has been reached yesterday. Has triggered very small pullback. Almost we haven't got any continuation that we suggested down to the 33.50 area. So market actually turns up immediately. So I'm not tied to repeat this. So we always talk about this. If you know the direction, you're sure with the direction of the market, apply the scale in position taking technique. Split your position in parts, take it in small parts and different levels. That lets you to participate. If you're wrong with the entry point and market turns up earlier, you at least will get some fraction of your trading lot and you'll take part with this trade. Currently, it's more difficult to catch precise points of the reversal. So you could just miss the whole upward direction that's forming on the market. And currently, probably we should return back to this tactics again. So just to complete the discussion of the 4-time frame chart, take a look. The upside target with the same ABCD stands around 34.77 approximately. And also, you could get here as the minor butterfly. So on the daily chart, we have big butterfly. But on the 4-time frame chart, you could get the butterfly back in this final stage of this performance. So you can see, easily could recognize by yourself. That might be left wing, right? That might be right wing. So 127 extension of this butterfly will be 35 even. So really great round the top. That's where market potentially might be going. So on hourly chart right now, let's consider the possible entry chances. The one thing that we do not want to see, very similar to the euro currency. Both markets behave similar. Both markets have shown the breakout out of this range of the fake Powell resigning news. So this was a consolidation that has been broken successfully. And in the current performance, we obviously do not want to see the market drop below the 33.80 area. Because in this case, that was the OP target. In this case, market will start forming bearish reversal swing, which is not good. We would like to see the markets keep going higher, because currently, from the technical point of view, there are no reasons for the sharp reversal. Market is not at some strong resistance. Market is not overbought. It's not at some important target. Actually, it stands in relatively free space. Yes, we have some resistance with the channel, but I don't think that it might be some decisive market will just collapse right back down to the lows. So more probable that might be moderate pullback here and then further upward continuation, I suppose. Anyway, in the current circumstances, I suppose that we could keep an eye on these two levels, 34.17 and 34 even, as confidence support. This level will be as an invalidation one. And since we have two confidence levels, there is some advanced tactic for the stop placement exists. So for instance, what idea? When the market hits the confidence for the first time and you're buying here, you could place the stop initially here, but once market start bounce and show a reaction on this support, move stops to break even immediately. That is done for two moments, two reasons actually. First, if everything goes with the plan and market indeed start upward action here, because this is actually the last level that we would like to see. This level is already will be somewhere near the invalidation point, and that is just for mostly for protection. And if market starts upward action right from here, that's great. You already have your stops in the break-even, and markets keep going higher. If that will be just temporal bounce, respect on the support, and then market will drop down and break it, you're out at the break-even. So that's really great technique to use. Simultaneously, you could protect your position initially when the market just come into it, placing stop below, because there's two support, conference support area, and it's very low probability that market will break it. So this is great point for placing the initial stop order. So that's currently what we see on gold market. Let's keep watching. Once again, remind you about the scale in position taking technique. So take the 20% of your trading lot here, because you can see market could show really small retracements. If market drop to the conference, add more here, another 30-40% of your trading lot. Trade it correspondingly, and so on. So that's probably all for now. Let's keep watching what will happen. Hopefully we're not mistaken with our view on the gold market based on a weekly time frame scenario in general with our trading plan, and market is going for testing of the 35 top.